Yours, Greg.
Okay, good afternoon everybody, and welcome along to the Lunch and Learn on AR adjustments and invoice corrections. So we're scheduled to go for around 30 minutes today to run through this session, and we'll be just going through a lot of the basic questions that we get regularly, as well as some of the trickier, maybe harder to find things as far as correcting any accounts receivable invoices or payments. So we'll run through everything there for you in the next 30 minutes or so. Okay, the agenda for today. To start with, we'll just review some AR settings, and just so that when you're actually making any adjustments, you just know what GL accounts are going to be updated, particularly when it comes to either write-off or bad debts or refunds of payments. So we'll run through those AR settings just so you know where your system's set up to send that information through to in the general ledger. We'll then review the accounts receivable and billings workflow, and just how invoices move from billings into accounts receivable, receive payments against those invoices, and then the correction process and how to send an invoice back to billing to be adjusted or changed. Then we'll go on to applying cash receipt to the correct invoice. Sometimes when you're entering cash receipt information based on your bank account from a particular client, it can be a little tricky to decide which invoice they're paying if they haven't notified you that. So we can actually show you how to quickly and easily reapply that payment to the correct invoice at a later date. We'll run through write-offs or bad debts on unpaid invoices. We'll run through the process of how to correct an invoice that's come through from billings and contracts, and how to unpost it and reverse it back to billing, and how to make those adjustments. We'll then go through how to apply a credit invoice against an existing invoice, and then we can just go through, if we've got any time after that, a few of the other tricks with the adjust receivable screen. Okay, to start with, we'll just review the AR settings. So your administrator users within your organizations will have access to the accounts receivable settings. And once the AR settings is open, there's a GL settings button here to show you how accounts receivables linked into particular accounts within the general ledger. Once you click on that button, you get a GL settings screen come up. And then the one that we want to look at today is the miscellaneous accounts button. And once you click on that miscellaneous accounts button, you bring up a list of the general ledger accounts that are going to be updated depending on the type of adjustment that you put through accounts receivable. So an example here, we've got write-off and bad debt going through to a bad debts written off general ledger account, and we've got customer credit and customer charges, and that's for refunds and any sort of bank charges. So that's just where that information can be found, because sometimes the question we get from clients quite regularly is they've gone and made an adjustment to an invoice, whether it be a small amount has been written off, and they were just unsure of where the transactions posted to in the general ledger. And this points you to the right direction as to where this is being posted to. Now, some clients initially, when we set up their system, may not have all of these type of accounts set up in their general ledger. So sometimes they may go through just to a account or a clearing account, so that the accountants can review where this information is being posted to at a later date. But it's a good idea to have each of these type of adjustments within accounts receivable. Okay, quick run through on the billing and AR workflow and what we're going to be covering with the adjustments today. So most of our clients enter either a quick bill or a contract-based invoice in the billing module. Some clients enter invoices directly within accounts receivable as well, so they may or may not have contracts and billing. But most of our job or contract-based systems use either quick bill or contract-based invoicing from the billing module. Once those invoices are printed and posted from billing, they're posted through to accounts receivable, ready to either have a statement printed out or actually receive the cash in from the client to pay the invoice. So what we'll be going through in the first adjustment is when a cash receipt is entered in accounts receivable and applied to to an invoice. Occasionally, you can come across a situation where you've applied it to the incorrect invoice. This will be the process to reapply it to the correct invoice. So I'll just switch over to my Sage screen. I'll go into accounts receivable. This is in through tasks and going to adjust receivables. Just coming up now. It's a little slow when I'm connected to these webinar screens, but should come up in just a moment. Here we go. I'll choose the customer in this case. Okay. For this particular customer, we've got an invoice here that's had a payment, the top invoice, the invoice is for $79,590. The payment that's been applied to it is $51,757. There is another invoice here that hasn't been paid for that same $51,757.75. So what we want to do there is move the payment that's been made to that first invoice across to that second invoice. Now, the trick with using this adjust receivable screen is when you first come in here, it only shows you the unpaid invoices, so only the invoices that are left with a balance owing on them. If we click on the drop-down arrow and we go to all activity, we can have that expanded out so that we've got the invoices and then the separate cash receipt listed separately there as well. So now what we want to do is unapply that from that first invoice and apply it to this second invoice. Now, before we can do anything from here, we have to go and enter an accounting date. The accounting date here is very important because that's going to update the date that the invoice was actually paid. So the payment date here was on the 31st of the 5th. So I'll just enter 31/05/18. And then it'll allow me to click on the unapply button. Are you sure you want to unapply this cash receipt? Yes. And then down the bottom, this becomes a CSCS receipt. So it's a customer cash receipt, not applied to any particular invoice at this time. We just simply highlight that receipt, we choose apply, and now we can choose which invoice we want to apply that to. So I'll choose that second invoice and OK. And now that second invoice is now paid by that receipt, and that's as easy as it is to move that payment from one place to another. Just click on Finish and Start, and that'll post and update that information. Okay, the next adjustment we'll go through is if you've got some old invoices and you decide that for whatever reason there may have been a dispute in whether the work was completed, and the project manager or your accountant says we need to write off an amount of that of an invoice, or a complete invoice if we need to. So it's done exactly the same way through Adjust Receivables, and I'll show you how we just run through that. So back to Adjust Receivables screen. Okay, so if we want to write off this last invoice here, this invoice we may have decided that, okay, it wasn't going to be paid. We just want to write off that invoice. We choose the invoice, we put an accounting date of the write-off, so 30th of 6th. And then we click on the Adjust button. The Adjust button brings up the adjustment screen, and this is where we need to select an adjustment type. And I'll run through all of these adjustment types in just a moment, but just for now, we want to choose to write off. We can then put a reference and a reason for the write-off. The top amount here in this adjustment amount, this is where we put the amount that we're going to write off. In this case, I'll write off the entire invoice, but maybe it might only be a partial write-off. It might only be 10% or 20% of the amount needs to be written off. This is just where you put the amount that's going to be written off. Just to confirm the amounts that are going to be written off here for each line on the invoice, there's a total billed amount of $1,000 plus tax of $100 is going to be written off. And once we are happy with that, we can just click on Finish. And this is still sitting there as a pending post at the moment until we actually post this. So we click on Finish and Start, and that should now be posted, and that amount will be written off. Okay. Just bring it back up, that Adjust Receivables page. And we see that last invoice just doesn't appear on unpaid invoices any longer. If we go to all activity, we see that that invoice there now has an amount of $1,100 that's been written off, and that'll be posted through to the general ledger write-off account. If you decide that it was done accidentally and you didn't really want to write that off, you can actually void that write-off transaction from this screen here. So again, if you put in the An accounting date that you want to reverse that, we can just click on void if you want to void that write-off if it was put in there accidentally. I'll just leave that there for now though. Okay, back to our PowerPoint. The next item that I want to run through is an invoice is incorrect and needs to be changed. And the preferred way of doing this is to actually delete the invoice in accounts receivable and then send it back to billing for you to actually make the adjustment back in the billing module, and then repost it so that any adjustments flow through properly from there. Just go back into the adjust receivable screen. Okay, so if we look at this this invoice here, if we decide that that invoice really should have been $2,200 and not $1,100, there's the preferred way to correct that will be just to select the invoice, enter an accounting date, 25/06/18. We click on the void button, and it comes up with a message that if you continue, the activity will be voided and it won't be available to do anything on this screen. And then there's a tick box here for reinstate the invoice in billing. So if we tick that, that's going to put either the quick bill back or the contract-based invoice back as a pending invoice back in the billing module, ready for you to make any adjustments that you want and then repost it. So if I just say yes to that, that's warning me about the general ledger period of June as a future period. I'll just click on yes there, and I'll click on finish and start. And now that's voided that that invoice from accounts receivable and put it back in billing, ready for us to reprocess with the correct amount. So if I just open the billing screen, that invoice happened to be a quick bill invoice. If I go back into quick bill, screen's opening. Okay, and there's this $1,100 invoice that we just deleted from accounts receivable, sitting here in quick bill invoices, ready to be adjusted or posted. It works exactly the same if it's a contract-based invoice. You just go through the enter invoices screen for contract invoice. But in this case now, if I just change this invoice to $2,000 and then print the invoice, it's now got a status of printed, finished, and then if we then post that invoice through to accounts receivable as per our normal billing process. And now that invoice will be back in there as $2,200, ready to be paid. Ready for the client to pay. Okay, onto our next screen. Just a couple of the things to be aware of on this Just Receivable screen. The accounting date is very important. This is for each individual transaction that you do, whether it be applying a receipt amount, If you're doing any sort of adjustment, if you're voiding, make sure you put the accounting date that you want the information to flow through to in the general ledger period, particular general ledger period. Now, if the original invoice happened to be back in May, and then your general ledger has May closed, and you need to put it through in a more current period, you'll need to put it through in maybe June if the June period's open. So that's just a case of knowing if the general ledger period's closed. If you do try to put in an accounting date of a closed general ledger period, a warning will come up to let you know that you can't do that. The other trick here is when you choose a view, if you select all activity, it'll show you all of the adjustments and cash receipts. Whereas if you just have unpaid invoices, it'll just show you purely the unpaid invoices and not the detail on any cash receipts that have been received, and any other adjustments like write-offs or anything like that.
Greg, just before we go too far, we've just had a question come in. When we void an invoice in AR and tick the box to reinstate it back to billing, can the customer be changed?
Yes, it can be. You can do anything back at that level, but it's on the quick bill. It's generally easier to delete that quick bill invoice and then re-enter it completely. If it happens to be a contract-based invoice, you'll need to delete the invoice, change the contract setup, and then create the new invoice. So even though I'll say yes, you can change the customer, more times than not, it's easier to, once it gets back into billing, delete that invoice and then re-enter it for the correct customer.
Mm-hmm. And just one other question that's come in saying, if you don't have the billings module, when you void an invoice, where do you go?
Okay, if you void the invoice, it's totally, and you don't have the billing module, the invoice is totally voided, deleted, removed from accounts receivable, and you'll have to re-enter the invoice again directly into accounts receivable. So for those that don't use the billing module, you'll need to just re-enter the invoice, as it'll be totally deleted out of accounts receivable. Okay.
Thanks, Greg.
Okay, I just wanted to run through the adjustment type. When we're actually adjusting an invoice, the adjustment type makes a difference as to how the other information is going to flow through to different parts of the system. So I'll run through the adjustment types and how they work. Now, from that adjustment type drop-down list, we can have a billed credit to reduce the value of an invoice and a billed debit to increase the value of an invoice. And this will also update the amounts that have been invoiced against the contract and contract item and the job. The disadvantage of making adjustments for invoice amounts here is that if you look at the invoice amount in accounts receivable after you've either added to or removed it through billed credit or billed debit in accounts receivable, and you compare that with the invoice that was originally entered back over in billing, they won't be the same, because even though it updates the invoice detail, it only updates it in accounts receivable and contracts, contract item and job. It doesn't go back to the billing module and update it there. So if you rely on some reporting from the billing module on amounts invoiced, that wouldn't be the preferred way to go, using billed credit and billed debit. In that case, it'd be best to actually void the invoice in AR and go back and fix it in the billing module. Okay, the next two items are AR credit and AR debit. what this does is it either increases or decreases the value of the invoice, but it doesn't update the amount flowing through to the contract item and job as amount being invoiced. So if the original invoice was for $1,000, the contract and job information would still have that $1,000 there. But if you put in an AR credit of $500, it's just going to reduce the invoice value down by $500. But as far as the contract and job goes, they're still being invoiced for that full $1,000. It's unusual if you need to use those, but that's the difference between AR, debit and credit, and bill, debit and credit. The next two are very similar as well, bad debt and write-off. The bad debt and write-off updates the invoice value, and so if you write off the entire invoice, the invoice value will be going back to zero, and the other side of the transaction will go back to the either the bad debt or the write-off general ledger account. It won't update the contract values or the amounts invoiced against the contract or the job. It'll still it'll still be recorded as revenue that you've invoiced and received in for the job and the contract. And then the other side of the transaction, once you do put through a bad debt or write-off, it'll go through as an expense into your bad debt or write-off. So that's just how those two items are handled. The next adjustment that can be done is customer debit or credit. So if you agree to give a customer a credit, you can just go in through Adjust Receivable and put in a dollar amount if you've got some sort of agreement with the customer. It's not allocated to a specific invoice, contract or job at this time. It just is a customer credit that's sitting there in Adjust Receivables and waiting for you to apply that to an invoice at a later time. So if you provide a credit for a customer, then a month later you actually put an invoice in, that credit can be applied to that invoice as well as any other payment to that invoice as well. The final adjustment type is refund for cash receipt amounts. When you choose to adjust a cash receipt amount, you can choose refund. When you choose to refund either all or part of a payment, it goes through and deducts the amount off the cash receipt, and the other side of the transaction goes into a refund GL account, and then it's ready for you then to actually make that payment back to the client, either directly through cash management or accounts payable, and linking to that refund account in the general ledger. So they're the adjustment types to give you an idea of the differences between those. Preferably, we don't normally recommend using the top four, build and AR debit and credits. It's cleaner if you do actually void the invoice and re-enter the invoice for the correct amounts if you can. Bad debt and write-offs will be up to your accounting team as to when you use that. Okay, another common thing we get is applying a credit invoice. When you put in a negative invoice, instead of applying credits through Adjust Receivables, a lot of clients like to put in a negative invoice to write off or to offset a live invoice. The way to apply this is just how we choose a cash receipt amount that's been used for some other payment, apply it to the negative or credit account, credit invoice, and then the invoice we want to offset, and then the original, apply the balance to the original invoice. I'll just quickly show you how we do that over in Adjust Receivables. So if I go back into Accounts receivable, adjust receivables. Screen's opening. Okay. Choose my customer. There's the credit invoice, and we want to apply that to the invoice for $1,100 there. We don't have an apply button down the bottom. We can only have an apply button come up if it's a cash receipt or a customer credit. So what we can do is we just bring up all activity, scroll down to the bottom. We get a cash receipt for this amount back on the 27th. We put that as the accounting date, 27/04/18, and we choose to unapply that. Are you sure you want to unapply this cash receipt? We say yes. That amount now becomes a customer cash receipt down the bottom of the screen, and the 3 invoices above it are now all as unpaid. So now we click on the apply button. We choose to apply it to the negative or creditor invoice to start with. Then we also not applied. A moment. Choose the wrong one. Won't be a moment. I'll just apply that back to the one that I want. Okay, that was a negative invoice. So this is a credit invoice previously. What I have to do is just choose an amount that was applied to a regular invoice. So I'll choose to unapply that on that date. Then go to apply. We apply it to the minus 1100. We apply it to the 1100. And then we apply it to the original invoice. We then click on OK, and now all of those invoices down the bottom are marked as fully paid. The credit invoice and the invoice for 1100, as well as the invoice where I've just shifted the amount off temporarily, and it's all back on the same payment date as what the original invoice was paid for. Yeah, original receipt that was entered. So if we go back to all invoices, we can see that down the bottom here we've got pending post. That comes up because we haven't actually finished this screen here yet. But if we go into finish and start, and it's go through and marks all those invoices as fully paid. Okay, that was the everything that I wanted to run through today. Yeah, there can be so much more involved with accounts receivable adjustments. That was an overview of the most popular, or most popular questions we get from clients. Naturally, there can be a number of other questions that come up, but I hope this just gives you an insight into what we can do with adjust receivables. Is there any more questions come through, Janelle?
No, I think we're on top of all the questions now, Greg. that was actually quite interesting. I hope everyone benefited from that. If there are any questions, just either type it in quickly now before we close off, or of course you can send through your questions to help@thrivetech.com.au.
Okay.
Nothing coming in. Thanks, Greg. I found that really interesting.
Okay, yeah, and if anything comes up in the next few days back in your office, by all means, just shoot us through an email, and we can help you out with any further adjustments.
Great. Thanks, Greg, and bye, everyone. Thanks for joining us. Talk next month.